Welcome, Nate.
Hey, Jack.
Welcome, everyone, to the quarterly report for the 5210 Fund 1. Now, this will be a report for quarter or Q4, but we're also going to touch on how the year went, the calendar year of 2020. So, first of all, let's look at the right-hand side here. Now, these capital metrics are not as the end of Q4. These are as of today. We had to do that because we had to add the value of the park that we acquired right at the end of the year. And we also had to include all of the capital that we raised. And some of that capital was raised in January. But we have just about $7 million or $8 million deployed across 6 parks. Current stated valuation there is about $17.5 million. Our current debt is 8.4 million bucks, and our current appreciation is 1.343. And you'll see that that reflects a 48% debt across the portfolio, which stays underneath that 50% debt commitment. So 2020, what an interesting year. Hey, Nate?
Yes, sir.
Indeed, indeed. And Q4 was easily our busiest quarter of the whole year. Nate thinks it was busier than all 3 other quarters combined.
Yep.
We bought 2 parks in Q4. We refinanced a park. We onboarded new teams, and then we still executed all of our quarterly goals. And we had holidays in the middle there as well. So good news is that COVID-19's impact has diminished at the parks with the exception of the OG. And Nate will touch on that when we talk about each one of our parks here. I would say, considering the circumstances that were handed to us this year, we should be excited about how this portfolio performed. Acquisitions, as you all know, we acquired Palo Verde Hills in October, and we closed Country Breeze right before the end of the year. Our leadership team has grown. So you guys, we mentioned last quarter that we brought Deanna on board. We elevated her because she's such a rock star. She is now sitting firmly in that property management seat. And then Alicia, who has been a contractor for us for a long time, is now sitting in the finance seat. And then I got myself an assistant finally, which is nice. So Charmaine, you guys will probably hear from her from time to time. She helped me with a bunch of administrative stuff. And then in 2021, we are going to bring on an asset manager so that Nate can have some help moving the needles at the parks. So the portfolio performed better or at or better than the projections in 2020. 2 of our parks were impacted by COVID, and the balance of parks overperformed. So we hit 10 to 46% above the projections, which is amazing considering we're in the middle of crazy pandemic. And then Nate will also talk about some of the attractive debt that we added to the portfolio that will have a great impact this year. So Nate, why don't you take the baton and talk about Q4 for each one of our parks, and then a little bit about how the overall year went at each one of these parks.
Yeah. Oasis Gardens, when we got into the business, Jack, we said, let's make sure we have some recession resistant real estate. This was the first park we purchased. And the reason we liked it is because it's got 100+ park models in it, which makes it super stable. And in this kind of environment where we have transient RVers who are pulling back travel because of COVID, we're really excited that we made that decision. That was the thing that really has saved the entire Yuma market, which is park models. So this park has been impacted the most. And where we saw the biggest impact was in Q4. We've got 55% of our travelers that come to the OG are from Canada, and that border has been closed. So they've been unable to travel across the border. So even those Canadians who have park models, they still paid the entire year lot rent because they've got a permanent structure there for us. So, that Q4 is going to trickle into Q1 for sure. And we'll see how it goes for the rest of the year. We're hoping that travel comes back and there's less restrictions. But that really, with the park models there, it really, kept top line revenue. We were only down around maybe 10% or so in Q4. So it really saved the park in general. So capital improvements we completed. We rounded out a big barbecue area. We spent a lot of energy getting that teed up. That's going to look great. It does look great. We had a busy quarter in Q4 because we refinanced the park. We refinanced the rate down from a 5% rate down to 3.2%. We put it on a 30-year AM with 5 years of interest only. So the great part about that is we're going to nearly double our bottom line, and not the bottom line NOI, but the bottom line cash flow at the park, which is going to have a massive impact on the overall return for the fund. Let's see, let's talk about Central Park Estates. So this park is the other park that got impacted by COVID, but the good news is the program that we put in place in March really allowed us to recover the majority of that deferred income throughout the course of the year. So we put a number of residents on payment plans to get caught up for any monies that they didn't pay us. They got caught up over 6 to 7 months. The majority of that got collected by the end of the year. Some of that will trickle over into Q1, but hopefully moving forward, we've got a stable group of residents there that are holding good jobs, and we've actually helped them through a few of those items. So I would expect us to have some stable cash flow at the park. From a capital improvement perspective, Q4 and 2020 in general was a massive year at Central Park Estates. We completed the clubhouse remodel. It was an old 1-bedroom home that we gutted, removed walls, and created a big giant open room concept clubhouse that got completed. We're going to have a ribbon cutting kind of opening ceremony here in a few months, which will be really great. We've been talking about that for a long time down at the park, and the residents are really excited about it. We did increase the rents on January 1, $15 a month across the board for everybody there. And I'd say overall, we've got some really happy residents at that park. The park continues to shine in the city of Sierra Vista and what we're doing there. Everybody who comes back over there is really blown away at the work that we've done. So excited about where that park is going in 2021. We're putting a lot of effort and emphasis on rehabbing homes, which we've done there. We sold some good homes last year, and we've got some inventory available, and we're getting a lot of activity on that now. So I would expect that trend to continue. So why don't we go over and let's talk about Santa Rita Heights, Jack, is our next park. So we completed various smaller capital improvement projects at this park, rehabbed a few homes, sold a few park-owned homes. A lot of our effort was continuously pushing on continual cleanup at the park with the residents, getting everybody into compliance. That's been a slow turn with the residents there, but by design, that's what I like to do. We had a little bit of COVID impact in 2020. I've got a couple scraggler residents that we're continuing to kind of bring in and out of our program, honestly. But you're keeping the line of communication open with them, which is really important. We transitioned a new management team in October. Anytime we transition a new team in, there's a learning curve for them. It's time for us to bring on new people, interview good people, and make sure that transition went smooth. That took some time for us in Q4 as well. So I think the most important thing to discuss here on Santa Rita Heights, Jack, is, as you know, we're considering a sale of the park. So when we've been able to move rents so quick, and we've had really good activity with our park-owned homes and rehabbing them and selling them, we believe that we could exit around what our projections were at year 7 now. So we're working with a broker, and we're going to see if we can test the market and send that one down the road. Melody Courts, the next property in the portfolio. We had various capital improvement projects that we executed on in 2020. Our main focus was really bringing residents into our processes, getting new leases out. This was the majority of the entire year, considering we purchased it in November of 19. Last year was really getting everybody on board with the way that we operate. We rehabbed a few park-owned homes. We sold a couple park-owned homes. And really at this point, we're ramping up really hard because there's a ton of inventory sitting there and it's ripe for the picking. And we spent a lot of time in December and in January, and we've got a really aggressive park-owned home marketing campaign in place, and the interest is off the charts. I'm not going to spoil anything, but I will do a little bit of spoiler alert here. We've already sold 2 homes in the last week and a half. So things are picking up extremely hard, fast there, and we're excited about the direction of that park, and the management team that was there as well, which we also transitioned a new team in there in October. And those two folks are working amazingly well together. The culture at the park has really turned around from our last management team, and I think we've got a great park there. And with the interest that we're getting, that's going to be a perfect spot, or perfect park for the portfolio as well. So let's talk about Palo Verde Hills. Next page, Jack. This is the park that we acquired in October. That team there that was in place, we had an existing manager. We transitioned her seamlessly into our processes. She loves working with us. She loves the more of a professional approach that we take to managing parks. I found a gentleman in the park who's great for maintenance, so I brought him on. He's working 10 or 15 hours a week, and we're doing some general cleanup, some stuff that just hadn't been touched for 10 years at that park. Everybody's really excited about what they've seen. Folks that are selling their homes for whatever reason, the people who are coming in are really excited about what the park looks like and the plans that we have. But there's not a tremendous amount of work to do there. So the work that we did spend and kind of our plans moving forward is we've got one park-owned home on site, which we're going to keep as a rental in the event I need to use it for a manager home down the road. And we're going to push into a couple other small capital improvement projects at the park this year. But, Q4 was a great transition, and that's going to be a nice little park for the portfolio. I'm really excited about that one too. So our last one, Country Breeze. Country Breeze, the greatest part about Country Breeze so far, besides the fact that we got an incredible deal on the park, and it's going to be a really big push for overall return in the park, is that I stole our management team from Central Park Estates in Sierra Vista, and I elevated them up to this park, and I'm going to use them as a bit of a regional team. So that transition, there wasn't a whole lot of education on our systems and processes. They plugged right in. We rolled right into our weekly meetings and our quarterly goals to get the park transitioned. And that's going to be a great park for the portfolio as well. But the majority of our work that we've got to do there is on the management side and undoing some of the stuff that the previous owner had done and conditioning the residents for 20 years. So as it relates to COVID, we haven't seen much of an impact at that park at all, which is great. Another thing to note is that park, the debt that we put on that park was shy of 3% interest on a 30-year AM, and we got 2 years of interest only. So the debt that we got there was incredible Freddie Mac debt that's going to really boost the heck out of the bottom line returns at the park. So in general, I think if I could wave a magic wand and buy 10 or 15 more of those parks in the next few years, that would definitely be a wish that would be granted, and I love it.
Hey, Nate, one more thing before we move on. I know that you were excited about the idea of a little bit of economies of scale now that we have a senior mobile home park, a senior RV park, and a family mobile home park all in the same market.
Yes, there's a couple things that's doing for us. Number one, we're getting cross referrals. So folks that call the OG who are thinking that maybe we have mobile homes to sell or rent, we can send them over to Country Breeze. And if people are calling Country Breeze and they're asking if we're a family park or a senior park, and we tell them we're a family park, and they say, oh, well, I was looking for a senior park, we can say, oh, that's okay. We've got a mobile home park. It's called Melody Court. You need to go over there. We've got some homes for sale. So all of our managers are talking really well to each other. We've also got, shared resources for vendors and contractors. I got all those managers and maintenance team dialed in, so they're using the same information. And I've got help if I need it. If we're overseeding at the OG for grass, I've got a couple other laborers at a few other parks that I can grab and take over there for a couple days to kind of lighten the load. So working well together with all three of those parks and all three of those teams, the economies of scale, but it's also it's just support for one another, and all those managers get to talk about Yuma and everything else. it's proving to be really smart the way that those three parks work together.
Thanks, Nate. Everyone
Yep.
else appreciates hearing about the park straight from the guy who's driving every day. So
That's
let's
a
talk
lot.
about new acquisitions. We don't have anything that we got a big pipeline, and there's all kinds of parks that we have interest from owners, but we do not have anything in contract. But if you look up on the top right-hand side, we got about $2 million left in the fund. So we'll probably buy a park somewhere in the $2 to $4 million range. So if we find a great park that's in the $2 million range that we can pay cash for, that'd be great. But we still have the ability to put some conservative debt on a $4 million park. One of the things I think is important, well, first of all, let's talk about the market really quick. Nothing has really changed. The market's just as hot as it was last quarter. There's institutional demand. There's demand from middle market buyers. There's guys coming from California with 1031 exchanges. So the market's still pretty hot. Prices are still climbing. Cap rates are still compressing. So finding available inventory when you don't have a pipeline like we do would be difficult. We're going to still continue to take capital calls for the acquisition of park number 7, which we expect to be the final park in the fund. And existing investors are going to have the first right of refusal over new investors. However, I think it's important to share that, if you have an intention that you'd like to add some more chips to your pile before we close the fund, make sure to reach out to me. So it's, if somebody else makes a capital commitment, I'm going to honor that unless somebody, one of our existing investors wants to do that first. Here's the favorite page. So this is going to look at the whole year. And this is pretty exciting to share. So up on the top there, you see that our portfolio year-to-date performance compared to the original projections that we set when we acquired the 6 parks that we own. Nate has been masterful, and he's hit 111.2% or 27% of those projections. So we're outperforming by 11.27% on the projections that we had planned for 2020. The distributable cash flow for the quarter is a little bit up from last quarter, 83,000 bucks there, just slightly over 6%. Investors are going to get most of it. Nate and I get a cookie. And that's largely due to the fact that we bought Country Breeze in Q4 and we raised capital and we had to pay a preferred return on that, even though we didn't receive any income in Q4 from that park. So that reflects to a 7.24% annual cash on cash across the portfolio. The unit values are still the same as they were before at 1,071, and that still equals a 13.1% total return for investors for the year. So most of the 2020, as we discussed, most of the 2020 activity occurred in Q4. I think that a couple items to note, and I just touched on this, is that, we didn't receive any income in Q4 from Country Breeze. And then, of course, Nate had talked earlier about the COVID impact at the OG, but we're still really excited about the performance of the fund in 2020. So bottom line, we don't need to touch on all this kind of stuff because we just covered it. But we promised a 6% preferred return to investors, and we delivered. And Nate and I made a few bucks as well. So the distributions are in transition, so they're ready to go. You'll probably take 3 to 5 days, depending on the financial institution that you're going to receive those at, before you'll see them. Anybody who's chosen to reinvest is going to see in their portal that paid in capital amount increase. And then as soon as we're done with this report, we'll upload this report, the P&L, and the balance sheet, along with each investor's individual statement for the quarter. And then, of course, if you guys want to access your investor login, you can do that right on our website on the top right-hand corner. It's the big blue button that says investor login. So that concludes our quarterly report. If you have any questions, you can reach out to me. If you're interested in making some more capital commitments, reach out to me on that as well. And then, as always, we ask you to spread the word about what Nate and I are doing over here at 5210. So thank you, Nate, and thanks, everyone.
Thanks, Jack.